Hello everyone. Did you know that SEBI can hold back IPOs and public offerings due to pending investigations? If a company is under regulatory scrutiny, its draft of a document may be delayed or even rejected. In today's video, we'll break down the SEBI General Order 2020 and how it affects IPOs, stock issuers, and investors. Stay till the end to learn about SEBI's penalties and how companies can stay compliant. What is SEBI General Order in 2022? The Securities Exchange Board of India issued the General Order 1 of 2020 under Section 11A of SEBI Act 1992. This order allows SEBI to stop companies from issuing IPO prospectus or public offer documents if they are under regulatory action. Key takeaways from the order is SEBI can pause IPO processing if there is an investigation against the company or its promoters. Draft offer document can be kept in abeyance until regulatory matters are resolved. SEBI aims to protect investors from fraudulent IPOs and misleading financial statements. Why does this matter? If a company fails to disclose pending investigations, investors could be misled into buying risky stocks. When can SEBI hold back draft offer documents? SEBI may delay or stop an IPO in the following cases: ongoing investigations, if SEBI is probing the company for fraud, misrepresentation, or financial irregularities. Pending show cause notice, if the company has been issued a notice under SEBI Act Section 11 or 11B. Non-compliance with SEBI order, if the company hasn't complied with the penalties, disgorgement orders, or other directives. Recovery proceedings, if SEBI has ordered monetary penalties and they haven't been paid. Then court or tribunal orders, if a court has restrained the company from making a public issue. So investors beware. Companies with shoddy financials may try to rush IPOs before regulatory actions. SEBI now has a stricter control to prevent this. So what happens when show cause notice is issued? If a company is issued a show cause notice for an offense, SEBI follows a structured process before allowing IPO approvals. Step 1, the company receives a show cause notice, SCN. Step 2, SEBI puts IPO processing on hold for up to 90 days. Step 3, if the case isn't resolved, SEBI may extend the hold for another 45 days. Step 4, if the company delays proceedings, SEBI can identify, even if the company delays proceedings, then SEBI can indefinitely suspend IPO approvals. So, lesson for the investors is always check if a company has pending SEBI investigation before investing in its IPO. So, what if a company fails to pay SEBI penalties? SEBI doesn't just stop IPOs, it always enforces a strict penalties for non-compliance. Companies that don't pay monetary penalties or disgorgement orders face IPO rejection. Draft offer document will be kept in abeyance. Legal action. SEBI can file a case in a court to recover penalties. Permanent market ban. Companies and promoters can be barred from the stock market. So investor avoid companies with a history of SEBI violations. SEBI's warning: IPO approval doesn't mean clean sheet. Many people think that if SEBI approves an IPO, the company must be 100% clean, but doesn't that is not true. Say IPO approvals does not mean that company is cleared of all investigations. Investors should still analyze financials and risk factors before buying shares. Check SEBI's website for pending cases before investing in an IPO. Smart investors always research before investing. So the key takeaways and investor advice. Let's wrap up with some key lessons from today's video. SEBI can halt IPOs if a company is under investigation. Companies must disclose regulatory actions in their offer document. Pending penalties and non-compliance can lead to market bans. Final advice for investors: always read the draft prospectus before investing in IPO. Check SEBI's watch list for companies under scrutiny. If a company's IPO is suddenly delayed, find out why it is. That's all for today's video. If you found this information useful, hit the like button and subscribe for more updates on stock market regulations and IPO alerts. Comment below if you have any questions about CB regulations or IPOs. Turn on notifications so you don't miss the latest financial updates. Thank you.